Super smooth 98.1 FM. Good morning and welcome to Business Express. I've been joined by our special guest this morning as she helps us make a sense of all of the figures coming out from the National Bureau of Statistics and all other issues related during this morning. You can be part of Business Express if you send us a WhatsApp message relating to the topic of discussion this morning on 0809 444 0981 will be where we hope to read all of the messages. So let's get into the conversation. It's all around Nigeria's inflation skills, 28-year high in April. And our guest this morning, Oyinkansola Aregbesola. Good morning to you.
Good morning. Thank you for having me.
All right, as we get started this morning, let's begin with what they are looking at this morning relating to Nigeria's headline consumer inflation accelerated to a 28-year high in April, hitting 33.69% year on year, up from the 33.20% in March. Food inflation, according to what we see now, has reached 40.53% in annual terms against 40.01% in March. Only, does this hit you in any way, or well, it's not in your business? Not you don't. Inflation has nothing on you, really.
Well, it's really my business because I mean, the direct impact of increasing inflation is the fact that it reduce your purchasing power. So yes, it's something that affects every average Nigerian on the street.
So let's talk about what are the main drivers of this latest inflation figures on a year-on-year basis.
Yeah, so the increase on a year-on-year basis that we've seen is actually primarily driven by base effect and low base effect. And what do I mean? It means that when we look at the year-on-year inflation numbers as of April 2023, I think it was around 22 percent plus. That is low compared to what is obtainable this year. So that low base effect, so that even though, because if you look at the numbers really, if you look at the month-to-month figures, it actually decelerates. So even though there was like a cool off in the month-to-month figures, the year-on-year numbers would actually increase because of that low base effect from last year. So that's the major reason why we are seeing that year-on-year increase in inflation numbers for April 2024.
You touched on it briefly now when you talked about you noticed that there's a month-on-month deceleration, but the headline inflation in April slowed to 2.29% from 3.02% in March. Food inflation slowed by to 2.5% from 3.62% in March. How do you interpret these figures vis-a-vis the rise in the year-on-year figures?
Right. Like I mentioned earlier, the base effects, also have a role to play, in those year-on-year number increasing at that, level. So so that is, the major reason why we are seeing, like a contradiction in the inflation numbers. The month-on-month inflation number is decelerating, but the year-on-year numbers are increasing. There could also be some form of persistent structural issues that have not left the same, which would also contribute to that. But looking at the inflation numbers itself, the month-on-month figure itself, I mean, the reason why we are seeing a reduction really is, I mean, look at what happened in the month of April, with the exchange rates stabilizing a bit, and as well as I think diesel also reduced in the month of April. We saw that the Dangote refinery slashed diesel price, so that affected that month-on-month figure that we are seeing decelerating. So yeah, so I'll say largely due to base effects, that's why we are seeing some form of contradiction in the month-to-month figures and as well as the year-on-year figures.
So let's crunch the figures now and break it into what the man on the street, the common man and woman out there would understand. What does this mean for them? Because in one breath we say on a year-on-year basis, it is 28-year high. But from what you're breaking down right now, it tells us that there seems to be a deceleration, but people don't run with that. So please break it down. What does it mean for the average man out there and woman on the street?
Uh, Thank you. So, like I mentioned earlier, it decelerated, to 2.29. So, it doesn't mean that your purchasing power increased really. So it just simply means because inflation numbers is not. So when we say that inflation on a month to month reduced to a particular percentage, it doesn't mean that there's a deflation. No, it's still inflation. It just simply means that the pace at which the price of goods and services are increasing is moderating. So for the average Nigerian, it will mean that the pace at which your purchasing power reduces is actually decelerating. That's the meaning. But doesn't mean that you are not being eroded of your purchasing power. Your purchasing power is still being eroded because there's still inflation. So that is the interpretation for the average Nigerian.
Okay, so it looks like we have a long way to go, but from these figures now, it looks the Central Bank of Nigeria, CBN, they're likely to have the MPC meeting this month. That's next week precisely. Could another hike in rates be on the horizon as we speak now?
Okay, so actually, I would expect the MPC, that Monetary Policy Committee, to actually hike interest rate further. I mean, and if we look at the factors, really, yes, we are seeing some pull off in the month to month figures, but it's still far from, very, very far from their inflation target. So I would say that there could be some incentive for them to further hike interest rate, but maybe probably at a much slower pace, as opposed to what was obtainable before in their previous meetings. So, and then there's the issue of trying to attract foreign portfolio investment into the economy.
Hmm.
And if these folks continue to see higher NPR rates, it would propel them to bring more FDI, that's foreign portfolio investment, into the country. Because when we look at the advanced economy, the US, for example, I mean, the market originally expected them to hike interest rates further, and that is not what is going on now because inflation is still sticky. So marrying that with putting your money in a more risky investment, you would need more incentive. So I would say that the CBN would try to, in order to try to attract foreign portfolio investors and also to meet its inflation target, we should see a further hike in interest rates next week.
So me, I'm just concerned about the businessman and the individuals out there, businesses. If potentially there might be an increase in the rate of in the increase of rates by the CBN, what does this mean for businesses and individuals out there?
All right, thank you. Okay, so the direct impact really is on food costs. So you should see higher NPL plus next week, but next week it should, because the monetary policy rates really affects the entire market. So it should feed into bank interest rates. For example, you should see higher loans, for example, or higher deposit rate, as the case may be. Overall, it will affect the borrowing cost for individuals, for personal loans, and businesses, business loans.
So at this point, let's bring in the listener. We'd like to read your thoughts relating to the latest figures released by the Nigerian Bureau of Statistics, NBS, saying Nigeria's inflation rate has risen to a 28-year high year on year as we speak, is about 33.69% right now. So let's know what your thoughts are this morning and how does that affect how many pieces of meat you might get in your plate when it's time for lunch or probably dinner. And so while we wait for that to come across, Onyi, I'm worried in this regard relating to at what point do we say we're heading into a recession? With this back to back we're posting, are we heading in that direction?
So I wouldn't say that. I mean, when it comes to um, economic indicators for a recession to be, it's largely on the economic aspects. So that's largely on the numbers. So we should see it, we should see instead of growth, maybe like a minus percentage for maybe for the three consecutive quarters. We should say that we verge entering into depression. So sorry, um, they're entering into recession. So recession is more on numbers, not inflation numbers.
All right, we just understand that it seemed like your connection is a little bit draggy at this moment. If you could change your location, but we're almost at the tail end of just a few more issues to wrap up, and we just hope the network would cooperate with us. And let's close up this one as quickly as possible now. So let's get on to, as far as investors are concerned, we have seen impacts of the rate hikes in money markets and fixed income instruments. So if the MPC hikes again, will these instruments see higher yields?
Thank you. Okay, so in the past, we've actually seen a direct correlation, especially this year, on this, the impact of paper on the things like this due to the high NPL rate. But overall, in my opinion, I think we might have seen like some of peak in fixed income instruments. So can you hear me better now? Because I
Yeah,
just lost my audio.
yeah, there's clarity now. Go on.
Okay, so we might have seen like a thank you. So we might have seen like some of peak already in fixed income rates. But however, I should expect to see a little bit of increase really in fixed income rate. The increase might be a little bit slower, than expected.
All right. So let's assume you have an opportunity to meet with the CBN Governor, Yemi Cardoso, before he heads into the MPC meeting for next week. What needs to be done at this moment? What would you tell him so that we can stave off this rising inflation on the fiscal side to bring inflation down?
All right. So really, I think we've said this previously that inflation is not just based on monetary. Um, it's not. It's not only on monetary side. It's really supply and demand driven inflation. So that means that the fiscal side needs to step up their game in order to help cushion the effect of inflation, in order to support the effort of the CBN governor. Because really, if we don't see that same energy matched up, if we don't see that same energy from the fiscal side, I mean, whatever the CBN governor is doing, we might not really see a much impact as we desired. So really, on the fiscal side, we need to address infrastructural deficits. We need to increase infrastructure in the economy, and also deal with the lingering issue of security that has affected food producing region. I mean, because if you look at the inflation numbers, food inflation is like the major part of inflation. So if we should get to reduce food inflation, we would see an overall reduction in the headline inflation. So really, and the major reason for the hike in food inflation is due to insecurity, because a lot of farmers, are unable to access their lands due to insecurity, and there's limited labor, because of insecurity. So if insecurity is dealt with fast, we should see a cushion. We should see some form of slowdown in inflation number. So the fiscal side needs to step up their game in terms of security and providing necessary infrastructure to to help improve economic activities.
Now, this is the final item on the tray for you as we clear it up now. Let's see, what would be your inflation forecast as we move into the second half of the year? So soon, we're there already. In summary.
Yes. All right. So I mean, like I mentioned previously, that the base effect, the low base effect, affected the year-on-year figures for April. So when we look at the year-on-year figures for from the month of July, we actually saw it gradually increase. So if we should compare that to this year, it should help, the year-on-year numbers for this year. So we should expect to see some form of deceleration, because the year-on-year numbers from the second half of last year is higher relative to the one obtainable in the first half of last year. So it should help the base effect in that sense. But then also looking at the policies currently being implemented, if we should see, although the foreign exchange has been reducing again, or I'll say that naira has been depreciating again, since the end of April. But if we should see like a reversal in that trend, we should see some improvement in foreign exchange. It would help, cushion the effect of inflation. And we're looking at the fiscal side again. I think there's an expectation of issuing foreign denominated bonds, from July. So if that should happen, that would help, foreign currency supply, and as well as expectation of a 2.25 billion loan from the World Bank, which would, help, the supply level. So if the exchange rate is stabilized further in the second half of the year, we should see that number affect inflation rates for the second half of the year. And as well as, of course, we should see improved food supply. That would help the inflation number. So I expect to see some form of deceleration in the both in the month-on-month and the year-on-year figure in the second half of the year.
Thank you so much, Oyinkansola Aregbesola. Let's quickly get into a few messages we see here now. I find Oluboroko says, this continuous rise in the inflation numbers speaks to the reality on ground. I therefore don't expect the CBN governor to increase the interest rate this time around, but if he does, that will be a misadventure, from Fine Oluboroko this morning. And Ahmed from Ogudu says, in practical terms, we have been in recession since after the subsidy was removed in 2023, but the NBS will not declare that, since it's the agent of the government. We can number we can number the industries making losses in their financial reports. CBN is only applying book theories to curb inflation, which is not working. Ahmed from Ogudu. And our final message here comes in from Gilbert Musa from Festac, and it says, on the rising inflation rate, we need to ensure that what triggers inflation is checked, like legacy infrastructure, unstable electricity, bad roads, insufficient railroad network, insecurity, amongst other factors. Also, when the inflation was obvious in 1988 as a country, what did we do? Go back and use that template, are you saying, Musa? But you know what? It is time to wrap it up, and we say thank you so much to our guest this morning, Oyinkansola Aregbesola, Investment Research Analyst, ARM Securities. Have yourself a great Thursday.
Thank you for having me. You too.